And Anupam, I'm opening this thing for for the question answers.
Uh, uh, Thanks, Sandeep, for the detailed presentation. And to start with, actually, for the silver ETF, I think you said that markets are going to be a very volatile. So Mr. Gada has asked that it was $81 in the month of May. It has come back to 55 and now 63, 64. So is it a good time to invest in a one time, or we should take the exposure into silver through a staggered manner? So what is your views on that?
So my view is that when I say second half, which means between August to December month, you should do in phase manner. Maybe if you have to put money in, let's say 100 rupees, maybe one fourth, so 25% every month you can put in the market. Because why I'm saying now, yes, you can do SIP. Another thing, answer is yes. But if we believe the timing is vital thing, and we were the first to talk about deep correction will happen in gold and silver in January itself. So, and similar data points are endorsing that a durable bottom should be in place, and hence it makes sense to accumulate from next 3 to 4 months perspective, and then try to hold the position rather than saying that I will do only SIP. It's up to a very individual need, but I think it's a lump sum in next 3 to 4 months perspective is more advisable. The way if you really want to optimize on the timing side.
Thanks, Sandeep. Next question is from Mr. Rajesh Gada, and he wanted to understand when are we launching a fund of fund for the silver?
So we have already applied for it. Maybe 1.5 months time, it should be there.
Sandeep, next question is for the arbitrage fund, and this is question is from the way that arbitrage funds are falling. So when will they get stabilized?
See, you have to understand the arbitrage fund, because of changing regulations, some of the cost structures have changed, and that's the reason the returns have come down a bit. But it's not fair to say they are falling, It's a phase we have to look at. And things, anything new comes, look at cash has come in last few days. There's every day small amount of chaos is there. People are worried how will settle. Understanding aspect is missing. There's a new thing which is getting introduced. So I think we'll live with this fact. Things should start stabilizing maybe next few months' time.
Yeah, the second leg of the question was after cash, when will the market volatility settle? I think you have already answered that. Sandeep, next question is from again Rajesh Gada. He said in the Flexi cap, we are holding more than 80%, approximately 80% of the large caps. Any specific reason for such large cap share?
No, the way I look at is that it has changed. We have increased our small and mid also. But sometimes, markets are so fast. By the end of the month, you get the portfolio, you get that data point. But sometimes we are within the month, we are also trying to capitalize that opportunity. But as I said, in the April month also, for us, liquidity is very important. In the global turmoil period, liquidity is the most vital thing which we look at in the market point of view. And one of the reason, that's the reason the large cap exposure is relatively on higher side purely from the impact cost perspective and liquidity perspective. That's the reason. And as I said that in between we have increased our exposure last 10 days or 7 days, we have seen uh, they are becoming large cap, becoming very attractive. I don't think that one should get into it how we are managing. What we have to see, even in last 1 year when market has been very challenging, Flexi Cap has, our quant Flexi Cap has done very well. It has beaten the indices. The index has given negative return. We have given 10% return. And if you not only look at 3 years, 5 years, 10 years, actually, quant Flexi Cap is one of the best performing fund in that category. I don't think you as an investor or as a distributor try to get into it what exactly we are doing. Leave that part with the money manager, and we have demonstrated in terms of a track record of performance. So that's a way I will say rather than getting into very specific thing.
Sandeep, next question is on the markets by Abhijit. That with the rising yield in the US and Japan, will it going to impact the global markets and Indian markets?
So obviously, we as a house have been saying from 2020 onwards or 21 onwards, US yields will remain elevated from a longer period perspective. and both inflation and yields. So, what is important to understand, the impact in the developed market will be far more deeper as compared to emerging market, and even lesser in India. But obviously, it has its own impact. We cannot rule out that thing. But I said that don't try to compare. A lot of people look into US history, historical yields versus Indian historical yields, and then try to say this is the gap was there, this gap has expanded or shrunk, and then try to conclude. All those sort of correlations have broken down long back. And what is very important to understand, that we have to understand that till 2030, at least, we are saying we are in the structured bull run of yields and inflation globally, and particularly for the developed market. Despite that, okay, we are constructive on Indian equities. Because see, what is important when inflation was the, let's say, yield was 5 or 6% in the US few years back, and for various reasons, post Lehman crisis, extraordinary liquidity, they came into negative territory also. That becomes a new benchmark, which is not the case. If I go back and look at 200 years of history or 300 years of yield history, then you will find the yields were not as low as people thought. So it is something closer to the average. In fact, it is slightly lower than the averages of, if I look at longer term data. So I think we should not try to read too much about it and get skeptical. I think a lot of things have been priced in India.
Sandeep, the next question is on the scheme by Billy Babu M. That he wants to understand, is it a good time to start investing in the technology funds, technology called tech fund?
See, the way I will look at is that we as a house don't encourage thematic funds. Okay. Though we also have a couple of thematic fund which has been uh, what we call it. Even tech fund has done very well this year. But what is important to understand, that if you are a techie by nature and you say I have a mandate or mindset to invest in tech, then it makes sense. But instead of putting money in pure tech, I think it makes sense to be part of a broader category like Flexi Cap sort of thing. But if you are dedicated, then yes, we are more constructive now as compared to what we were last many quarters. So if I think going forward also, I'm more constructive on Indian IT space or IT services company.
Sandeep, next question is on the portfolio construction. What is your view on the crude oil, and do we hold it in the multi-asset? It's question by Vishal Doshi.
So in the beginning of this year, we talked about how crude will rally, and April I said that we're around 120. That by November, if you will see $70. It happened much earlier. We went long on multi-asset fund crude around 90, 69 levels or 68 levels. We booked profit around 92. It was very sharp move which happened. The way forward, if I have to look at, it will remain volatile. But we believe that we have seen the high of 2026. I don't see any circumstances for it going back to those 112, 118 levels or so. And the implied walls have corrected sharply. So, which means market implied analytics are not endorsing, or smart people are not believing that crude has potential to rise. And I'm saying that uh, you can trade if you can, but I think it will become a lackluster sort of trade despite the volatility will remain high. It will, so closer to 70 mark, I will be buyer in crude, and maybe closer to 90 plus or 96 level, I will be seller in crude. That's a range if I have to look at for next 6 months perspective.
Sandeep, our next question is again from the Vishal Doshi. And in the last call, you had mentioned quant flexi and multi assets as a key schemes to invest in. Today, you mentioned value will outperform growth. So, should we invest in quant value fund?
So this is not something new. This was there in January presentation, was there in April presentation. When we launched our value fund way back in November 2021, we talked about that growth as a cycle has peaked out in India, particularly. And hence, if somebody has a decadal view, value stocks will outperform globally also, but India in particular, India and Japan are more known from a value thesis, should do very well. And And when you take a decadal and longer term call, you cannot just say every month, every quarter, every few months this will outperform. There will be phases of underperformance. Broadly, we are constructive on our value proposition, and one of the reasons quant value fund has done one of the best performing fund in the value category, and in general also has done extremely well. So if you have a slightly longer term perspective till 2030, then you should put money in value fund. Answer is yes. If you're looking at only from 1 or 2 year perspective, then I still maintain the flexi cap and multi asset funds are far better choices.
Sandeep, next question is from Varun Sombanshi. Are you looking for shorting strategy in sectoral allocation inclusive in future? So maybe.
So obviously we have mandate up to 25% we short, we do short. But as I always explain, any new product comes, it takes few quarters to stabilize. If you see when hybrid was launched or X100 was launched or equity long short was launched, first 2, 3 months is thing with there. And then you see how it has picked up in the last 6 months, last 9 months, it has picked up last 3 months or last 1 month also has been extraordinary. So do we participate? The answer is yes. In fact, this is a product which gives me less flexibility as compared to other SIF because it has certain limitation of 4 sectors. But it will be a great product when we start practicing long short ideas. Let's say two thematic sector long and two thematic sector short. The moment we get into that phase, we typically try to look at some extreme inflection point to try to capture those moments. When whenever we see that opportunity playing out, we will be more aggressive. Right now is just a initial few months of that product. So it should happen, but it should be a long short product from the sectoral theme perspective rather than stock specific opportunity.
Sandeep, surely in the next con call, we will take more questions on the
Yes,
SIFs.
yeah.
And now, Sandeep, I have a multiple questions on the performance side of the mid cap. So, can you brief on the mid cap portfolio, uh,
Yeah.
on mid
So
cap fund? Yeah.
yeah. So even last year also we talked about when we said this year how the performance was, and I always highlighted that our mid cap portfolio or mid cap stock selection was not that great, and there's a reason. Wherever we have mid cap exposure, all those themes, mid cap, large and mid, and even multi cap, actually underperform. But April in presentation, I talked about that rebalancing, which we have done, 90% was done. We have largely rebalanced our mid-cap portfolio. So I don't see, and that's the reason it is leading the chart. If you look at last 1 month, 3 months, and 6 months performance, it is actually back in the game. But to get 1 year in 3 years, it will take some more time because it's a mathematical number. So if 1, 3, and 6 have done extremely well, better than the industry, better than the benchmark. So logically, in next few months, it will catch up further. Whatever changes are required, we have already excised that. And I don't see big challenges going forward because we have made desired changes after a lot of debate and we have implemented that. And that's the reason even the performance has improved.
Sandeep, maybe next question is from Sahej Pal Singh Mangat. And from the valuation point of view, are large caps more attractive or mid cap or small caps for lump sum investments?
So if you talk about pure valuation, obviously large caps are far more attractive than the small and mid. And particularly mids are very expensive because a very small basket of 150 stocks. So when everybody's chasing only 150 stock, their P expansion is on the higher side. And that's the reason if you look at pure valuation perspective, yes, large caps are cheap. But if I have to look at in totality, when we look at the VLRT framework, where we also talk about liquidity analytics and risk appetite analytics apart from valuation analytics, then we still believe if you are a long-term investor for 5 or 6 years perspective, SMIT as a category should do very well. So it's a call which you have to take. If you are a 6 months or 1 or 2 year perspective, then don't look at some of these names. But if you have 5 years, 6 years minimum investment horizon, SMIT category still makes sense, whether you talk about small cap or mid cap or SMIT category itself makes a lot of sense.
Sandeep, next question is that if you can throw some light on that, suddenly there is a spike in the performance. And would you like to throw some light? What are the changes we have done in the portfolio so that the return has come back suddenly? And how can we expect them to be stable over a period of time, maybe with less volatility? This question is from Bhupendra Naik, actually come through an SMS.
Okay. So it's not, we have made radical changes. Yes, we have revamped our portfolio, particularly on the mid-cap side. As I said, our mid-cap selection was not up to the mark, and that's the reason we have suffered. We also suffered because of our not participating in some of the new age companies which did very well last year, and still some of these companies are continues to do very well from a return perspective. Okay, since this company don't have long term history, and we generally invest more from a cash flow perspective rather than just narrative or story which you keep on hearing in these some of these companies which we underperform. Now, what is important to understand? Yes, A, we revamp our mid-cap portfolio, and even some of the calls which we took relatively early played out very well. Let's say understand that we were running a very skewed portfolio towards energy as a theme, okay, which was one of the large exposure we have in our portfolio. And if you really look at energy or power theme played out very well in last 6, 8 months. Okay, it is one of the best performing sector indices in India, and we being a concentrated portfolio were the biggest beneficiary of that. That's the one point. Second important point also is about not to own some of the stocks or sector which has corrected sharply. Even in the large cap and A group stocks, we have seen sharp correction happening in some of these names. Like tech was the classic exposure. We have zilch exposure. So it required, I will not say guts, but based on the data analytics, we were not holding technology stock. We were not holding some of the large private sector bank, which has one of the largest market cap in the country. Our exposure is zilch in some of these names. So bank underperformed, IT underperformed. These are two largest sector which is closer to 50% or more than 50% exposure to the Nifty. So if you have 50% exposure stocks which has underperforming the market, and if you don't own them, then by default you are beneficiary. So we also got a benefit of not owning some of these names where in the industry, when you follow the benchmark or hug the benchmark, then you are forced to own these names. So a lot of people suffered on that aspect where we were the winner of that strategy because we being active money man. These are 2, 3 data points I thought I'll just express it.
Thanks, Sandeep, for the detailed explanation. Maybe one last question. Again, I will say somebody want to understand your views on the consumption fund and how do you say that people who are into the thematic funds, how long they should hold the investments in the various thematic funds.
Okay.
And second part is, are we planning to come out with any fund of fund for the thematic funds so that it's easier to allocate the money into that? What is your
Okay.
views on that?
Perfect. So let me just explain the thesis. First of all, let's come to the consumption theme. Now, when we started this product, there were a lot of demand. The people who invested largely talked about why don't you run this product like a private equity investment, take very large concentrated bets from a longer term perspective. Because in India, we believe that consumption is a thesis, is evergreen thesis going to play out. They are expensive, they'll remain expensive. That was the general consensus on this thing. So we thought of that. Let's do run this product differently from the what we run for other scheme. However, that experience was not very good, and that's the reason in last 6, 8 months, beginning January 2026, we changed that strategy. We are no more operating the private equity style thesis, and we have come back to our dynamic style of money management. Private equity thesis is slightly more longer term, more static approach. So we have come back. That's the reason. Even the consumption fund has performed exceptionally well in last 6 months or so, particularly from January onwards. YTD returns are reasonably good. That's the first point. Second thing, though we are not big advocate of thematic fund, but we as a house have limited thematic fund. We still like large infra as a theme from longer term perspective. We still like value as a decadal opportunity. and we still like pharmaceutical or the healthcare again from a longer term perspective. And if you notice, our thematic funds are not very narrow. Like we launch a tech fund, a TECK, instead of launching the IT fund, okay, which has telecom, media, and IT, so more diversification. Instead of launching a power fund or energy fund, we have infra fund, which is much more diversified. Similarly, launching a FMCG, we have a consumption fund, which is more diversified. Instead of launching a pharma fund, we have a healthcare, which include insurance, hospitals, as well as the generic companies. Okay, so approach has been more diversified. That's the way we defined our thematic thing. Now coming to fund of fund, yes, fund of fund will be very good product, which we are launching very soon, maybe by September end or October or end, we will be launching both the products, and we will be launching both the funds together. One will be fund of fund equity side, one will be on thematic. See, we are not against thematic. See, the only problem is the thematic fund considered to be more risky because of few sector, lesser diversification, and hence a lot of people don't like it. But if you understand, let's say somebody asks this question about IT, if you understand IT, and we as a house said that yes, time has come to relook at IT, then yes, you should go and buy IT. If you understand pharma very well, you should invest in pharma. The problem what happens when people get carried away with some of the themes performing very well, and after a massive outperformance, people tends to get excited and try to put money in some of thing. That is not a great strategy. So a fund of fund on thematic side or one of fund for the general scheme, general active equity scheme should be a great product where with the help of our AI tools or with the help of our own predictive analytic thesis, which we want to do, our portfolio analytics, which we do, we can actually uh, try to time the sectoral shift far better than the individual's capability because we do through a system. So that could be a great product when it get launched. Maybe by end of September or October, you will see that product from our side.
Thanks, Sandeep. I think maybe we can, there are no more questions actually, just to summarize the same that, Quant Silver Fund, NFO is already open. NFO is closing on August 19th. Allotment on is on 20th and reopening on 25th. And during the NFO period, uh, anyone can fill a physical application and give it to any of the KFIN branch along with the DP details. uh, uh, Application will be done, and I will request all the participants to look into this fund from the timing perspective. Maybe Sandeep, few last words.
Yeah, I think, as I rightly said, within passive product, we are trying to time it. Okay. That's our edge as a house. We always say timing is everything and everything else is conjecture. Since this is a passive product, and if you can time a passive product, then the returns are extraordinary. People who got sucked into January 2026 or end 2025, they are still sitting on huge losses. Okay. And this is even in the multiple forum I talked about, don't get carried away at this point of time. So timing becomes very vital, and this is one and publicly we are showcasing that the possibility of very durable bottom is very, very high. This is a game of probabilistic science, not deterministic. So our probabilistic science analytics is showcasing that the time has come that to rebuild exposure on silver asset class. So it's a good product from a timing perspective also, and you get a very good diversification. Thanks a lot for participating, and I do expect people to participate in that. Thanks a lot for joining us. We'll catch up again next week.
Thank you very much, all the participants. Thank you, investment team. Thank you, Sandeep. Thank you.